Hello again, fellow BeachBum traders. Thank you for joining us for our video on how to make money trading elections, where we will try to help you answer questions like, do U.S. elections influence the stock market? And if so, how do elections affect the stock market? And we'll look at the various ways in different types of elections, the presidential elections, the midterm elections, etc., may affect the stock markets. And then we'll hopefully share with you some trading strategies, investment strategies on how you can invest and trade during the various years of an election cycle. Again, be it a presidential election cycle, what's called the presidential economic cycle, the presidential election cycle. And again, if you stick around to the end of the video, we'll talk about various strategies for investing and trading so you can make money in the stock market in the various time periods within an election cycle. So again, we hope this all helps, and we'll get started. Okay, let's first try to answer the question, do U.S. election results influence the stock market? Well, let's look at this Investopedia article, and I will include the direct link to this article in the description box below. And again, we'll try to answer the question, do U.S. election results influence the stock market? So you can see in this article, given the huge difference in U.S. fiscal policies from the political parties in charge, one would think that the party that controls the White House and Congress would have a huge impact on equity markets. To find out, Investopedia looked at elections over the years to see what patterns could be identified, examining the effect of the president's party on the market and the effect of the markets of the U.S. president enjoying support of Congress, having the party also in control of both the House of Representatives and the Senate. And we look at what happens when one House of Congress is controlled by the president's party while the other is not, a split Congress. In short, our findings seem to suggest the party running the country makes no clear difference for equity markets. So let me reiterate that to answer the question, do U.S. election results influence the stock market? Their conclusions was that the party running the country makes no clear difference for U.S. equity markets. So their key takeaways, the two main U.S. political parties have very different approaches to fiscal policy, which should influence equity markets. They examine the results of elections over recent decades to look for patterns, how markets react to elections in various scenarios. They look at how markets react when the president, the House of Representatives, and the Senate are all controlled by the same party, and how markets react when the power is divided. Essentially, the president and the party in power seem to have a negligible impact on the direction of the U.S. stock market. So again, to reiterate, whoever gets elected, the president and the party in power seem to have a negligible impact on the direction of the U.S. stock market. So they talk about how they assess the market impact. It's based on the Dow Jones at the start of October before an election, and again end of March the following year, to assess how the market did after as a consequence of the election. We look to see what effect, if any, the party in control has over the market. The influence differs if Congress is completely controlled by one party or the other, or what happens if it's a split Congress. And again, first they found that political control in recent years had become more divided. Over half were unified governments, meaning the same party controlled the White House, the U.S. Senate, and the House. However, since 1980, only 6 of the 21 sessions of Congress have been a unified government in terms of party control. So if the government is unified, the president and Congress are held by the same party. They say that's been less common in recent years. In 2016, they represent the Republicans control both the presidency and the Congress, and the Dow Jones climbed about 10% by the end of March. Conversely, when they had a Democratic unified government in 2008, Dow Jones was up around to 10,080, but by the end of March it had fallen. So, but that was during the subprime crisis, so they're saying that was probably an outlier. Then in 1992, a Democrat unified government, Dow climbed about 5% from around October to March. So based on the data gathered, it seems the stock market reacts well to a unified U.S. government with the exception of 2008. So here, if they have a Democratic president, Congress controlled by Republicans, as in 2014, the Dow was up about 1,000 points by March from October. 1996, a Democrat. It appears that the markets also react well to a Democratic president balanced by a Republican-controlled Congress. So if it's a Democratic president and a split Congress, as in 2014, the Dow was about 13.5 in October, and it rose about 7% to 14,500 by March. In 2010, the Dow climbed about 14% from October to the following March. So it appears that markets react well to a Democratic president, even if control of Congress is split. So a Republican president with Congress controlled by Democrats, they find in 2016 the Dow climbed about 10%. In 2006, Dow climbed about 6.5%. In 1991, the Dow climbed 16%. So it seems the market reacts well to a Republican president balanced by a Congress controlled by Democrats. Republican president split Congress, as in 2018, Dow fell 7%. 1984, the Dow climbed about 14%. So, to answer the question, does the election of a president affect stock prices? Well, it seems the usually divergent fiscal policies of the two parties should impact financial markets depending on who wins an election. Data seems to suggest that the party running the country makes no clear difference in U.S. equity markets. So again, to reiterate, the party running the country makes no clear difference in U.S. equity markets. How does a U.S. stock market react to a unified party U.S. government? Based on historical data, the stock market, using the Dow as a proxy, often reacts well to a unified government, with the exception of 2008, which was the financial crisis. Do markets go down when a Republican president is paired with a Democratic Congress? Well, it appears that the stock market looks positively on a Republican president balanced by a Congress controlled by Democrats. Bottom line, while it seems that often drastically different fiscal policies of the two main parties should influence markets depending who is in charge, the data seems to suggest the party running the country makes no clear difference in U.S. equity markets. Further, it seems that even if Congress is controlled by another party, which makes it more difficult for a president to pursue his agenda, equities markets react similarly. The data examined shows no clear pattern of market direction being affected by the party in power, regardless of whether the president also has support of Congress. So hopefully that all helps you answer the question, do U.S. election results influence the stock market. And again, the key takeaway, the conclusion that they made from Investopedia in terms of examining the Dow is that the president and party in power seem to have a negligible impact on the direction of the U.S. stock market. Okay, let's look at another article, another opinion on how do elections affect stock markets. Here's an article by Angel One. Again, I'll leave the direct link to this article in the description box below. They have some just general description, but we'll just jump to the section about how our stock market's affected by elections. So as they point out, elections are one of the most volatile times for the stock market, as they bring uncertainty, just like economic change, political change like elections or policy changes have a huge impact on the stock market. It's generally assumed that if the election outcome is in favor of the existing government, the stock market rises as it indicates political stability and vice versa. However, there are various other factors why elections affect the price of the stock in the stock market. So we take a look at some of the other factors that determine the relationship between elections and stock markets. So they talk about, what is there in the election manifesto. So they define an election manifesto as a list of all the economic, social, and environment policies that the contesting parties promise to enact once they are elected. If the election manifesto of a particular party consists of policies that will bring about economic growth, they give an example of a contesting party promises to slash tax rates, then the majority of policies are directed towards economic development. The likelihood of its win might lead to a rise in stock prices. So the ideology of the government, if the party has a better vision for economic growth throughout its tenure, it's more likely to win. If it creates positive market sentiment leading to an increase in share prices. If a party with vague and unclear promises shows signs of winning the election, it may create a negative market sentiment and lead to a plunge in share prices. So then they talk about the results of exit poll results. Results of exit polls indicate the possibility of a particular party winning. Exit polls, like a mock poll collected before the election to predict which party has a better chance of winning. If the party having better economic policies shows higher chances of a win, stock prices will increase and vice versa. If the result of the exit poll is in favor of the existing party, it will indicate stability, and they say stock prices are likely to increase. Expected economic policies, if the party has a higher chance of winning, is expected to introduce better economic policies. Stock market might show an upward trend. Then they point out some sectors or industries expected to boom. Pre-election, post-election period uncertainty not only affects stock markets as a whole, but also a major impact on different industries. The winning party plans to focus on infrastructure development. Stocks of infrastructure, real estate will increase. Similarly, if the election manifesto has a policy that could adversely affect pharmaceutical sector, it will lead to a decrease in the stock prices of pharmaceutical companies. So again, it's important to focus on what are the policies of the party that is projected to win, is winning, and how will that impact the stocks in that particular sector based on those policies. Then they talk about the personality and popularity of the leader. Personality of a leader also determines price trend in the market. If the leader has great personalities, influential, he'll be able to draw more foreign investment in the country, creating positive sentiments, leading to upward stock market trend. Stock market is the most unpredictable aspect. It's just generally unpredictable, and elections are one of those things that add to that unpredictability, that uncertainty. When elections coming up, stock market is often more sensitive. Relationship between stock price and elections is very complicated, cannot be predicted accurately. However, looking at the election manifesto, ideology, policies, and exit poll results can help you predict the trend in the stock market. So again, we hope this all helps you see how elections can potentially affect the stock market. Okay, if we also look at this article under the link for presidential election cycle in this New York Times article about the midterms, see the market usually rises after the midterms. Will this be different? And again, if we click on that link about the 4-year presidential election cycle, it brings us to this article, again, for which I will include the direct link to this New York Times article as well in the description box below. This is back from 2010, but again, it talks about the overall presidential election cycle, and there's some specific information about 2010, but the general presidential election cycle data, they're saying, we're entering the sweet spot of the presidential election cycle, and it's hard to bet against it. They say data going back more than a century has found that the stock market has generally done much better in the second half of a president's 4-year term than the first. If history is a reliable guide, big if, the market outlook should be brightening. Since 1942, 200 days after a midterm election, it produced a remarkably consistent uptrend, regardless of who wins. So again, remarkably consistent uptrend regardless of who wins. This report, they found in all 17 instances, the S&P 500 gained an average of more than 18%. Are the numbers a fluke? It's possible. There isn't a lot of hard evidence. Presidential election history is too short for the patterns to be statistically rigorously significant. Still, many people surmise it reflects the simple desire of politicians to get themselves and their parties reelected. He quotes, I think a president's elected tries to get rid of the dirty stuff in the economy as quickly as possible so that by the time the next election comes around, he looks like a hero. Started analyzing in 1968. Stock market is reacting to what the politicians are doing. If the causes aren't clear, the numbers are startling. There's a strong historical tendency for the market to trend higher over the course of the 3rd year of the presidential cycle. The average annualized returns for the Dow Jones from 19 to 2009 for year 1 is 5.5%. 3.7% for year 2, which again is the midterm year, 12.6% for year 3, which is the year after the midterms, and 7.5% for year 4. So he states the pattern strong enough to count as remarkable. Pattern's quite remarkable. So you got several quotes that say that this pattern is remarkable. Cautiously bullish views on the market. They tried to map the cyclical stock market returns to a deeper political business cycle, but didn't find significant correlations to factors like inflation or interest rates. So they're not able to come up with an explanation. But in this paper in 2008, they found evidence of a political business cycle corresponding closely to the election calendar. From 1961 to 2004, the money supply tended to start rising in the second year of a presidential term, followed by a rise in GDP. So he concluded the idea the Fed is divorced from politics and from real world affairs and conducts matters from an ivory tower setting is more of a myth than a reality. And then he goes through an example of the Nixon era. So I'll let you read that the specifics of that example. He points out there isn't enough information for formulating an investment strategy based on this election cycle. However, it's another important arrow to have in your quiver. So again, hopefully we've helped you add another important arrow to your quiver, another tool to utilize in your trading and investing strategies to help you succeed in your trading career. So hopefully in this video we've helped you learn how to make money trading elections. Hopefully we've helped you answer the question, do U.S. election results influence the stock market? And if so, how do elections affect the stock markets? And we've provided several strategies and trading techniques for your investing and trading methodologies so that you can make money trading the various years in the presidential election cycles, the various election cycles, the presidential elections, midterms elections, etc. So again, hopefully now you have some additional arrows in your quiver, some additional tools in your toolbox, so you can make money in any year of an election cycle. Let us know what you think in the comments below. Please let us know if you have any further questions about how to make money trading elections. And again, your comments in the comments below in our free Discord, in our Facebook group, etc. Any other ideas that you have on how to make money trading elections. So again, we hope this all helped you learn how to make money trading elections, and good luck and have a great trading day. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the BeachBum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows support, allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Another way that you can help support BeachBum Trading and being able to produce frequent quality content for you for free on YouTube, etc., is in addition to subscribing to our BeachBum Trading channel, hitting the like button on our videos, and hitting the notify so you're alerted when we release further videos. You can also choose to show your support for BeachBum Trading with a super thanks, which you can find below this video. If you hit the heart with the dollar sign, the super thanks, again, you can financially support BeachBum Trading in whatever amount that you wish, and we greatly appreciate your support, and that will help us, again, be able to produce frequent quality content that we can provide for you and all your fellow BeachBum traders around the world for free on YouTube. So again, we greatly appreciate all of your support, and thank you very much. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.